Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market overview. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. Okay, so let me actually unmute myself on the live stream here. Okay, everyone, so I am recording now, so we're going to do a quick overview on the charts. So last week was a pretty heavy-duty news week. This coming week, actually, let's have this come up for financial juice. So we should get what's coming for this week. I don't believe it's very heavy in the news. We do have one important thing, the durable goods, that's coming on Monday. And then we do have consumer confidence coming on the 28th. And then we have the PMIs for the manufacturing on March 1st. Now, this will be great to give us a bit of forward guidance in looking at how the inflation is potentially going to affect us at the beginning of Q2. So PMIs do give you a bit of a forward look on how we can see inflation affecting goods. And then March 2nd, we're going to get U.S. jobless claims. So the initial jobless claims, that's going to be a big number as well. Get a good idea, how are the jobless claims going? Are we continuing to rise in joblessness? Are we continuing to lower? In my opinion, I do think we're going to come towards this point of time where jobless claims will start to rise again, because a lot of people are on severance pay. When you're on severance, you're still considered having a job until that severance has run its course. So we're probably coming on that point where a lot of people who've had 3 months severance are getting near the end. So we should see the jobless claims numbers starting to rise, whether it's this report or the next report. So be on the lookout for the jobless claims to start rising. And then on March 3rd, we do have the services PMI and the composite PMI. And this is going to give us a bit of forward guidance on what we can expect for inflation via products and services for this week. So another pretty important week for news, not as heavy as last week, but this is going to be a pretty important week nonetheless. Now, going into the dollar. So dollars finally had, I would say, that decisive move up. I've been looking for it for quite some time. This whole price action here, I had found to be quite suspect, especially after this daily candle here on the 17th of February. There was a lot of hints here that we could potentially get some downside, but we did get that follow through to the upside. And now we're coming in to these fair value gaps here to really look and try and grab the liquidity that's residing at this level above this high pivot within these gaps, and then coming to test in this descending trend line. So this is going to be a very attractive area for price to still rise into. And then in my opinion, it's very likely, the probabilities are quite high, we don't immediately blast through here, again, barring that we don't get any fundamental news to change the valuation of what we're looking for. But as long as we're still in the same sort of theme of market, we're likely going to come into this descending trend line, find some resistance, and start to pull back. Now, the challenge is, are we going to pull back to make a higher low structure, or are we going to pull back to continue the downtrend we're in? Now, in my opinion, it's actually more probable we make a higher low structure and probably coming more towards this ascending trend line. Once we make this higher low structure, I would look for continuation over the next coming weeks to potentially a month or two back towards 108. Once we get towards here, then I would look for another retracement down, and this time we should be on alert for this ascending trend line to finally break bearish and then move further down towards 102 again, potentially even under this low here, down towards 100.39. Okay, so we are short term, in my opinion, looking for more upside. And then as we go into the further into Q2, we should see a little bit more upside and then potentially a trail off to start tapping lower levels. All right. Again, we'll see what happens as the Fed starts to be more clear on what they're going to be doing going forward, especially with the next rates hike. So we'll see what they're kind of thinking. That will change what I'm seeing here quite dramatically. All right, but so far, keep your eye on this path for the dollar. Next is the Dow. So Dow having that continuation lower, finally breaking the triangle and looking pretty good to have continuation down towards 32,441. So really coming after this level, it's very likely going to breach under that level and take the liquidity there. Once we take this low, I would not be surprised if we do see a bit of a pullback up. again, looking for a lower high to be made from this consolidation. So we could end up coming up towards the low end of the consolidation, about 32,850 to maybe even 32,900, so somewhere around here, and then failing off again, coming into these lower fair value gaps. And once we come into these bullish fair value gaps down here, that's when, again, I'm going to be looking for a higher low structure to start forming around these levels. Okay, a higher low structure from this low we made in 2022, and it's coming into the descending trend line we broke bullish. There's a good probability that we do make a higher low from here, and then we should see some continuation. Now, the continuation may not lead to a higher high from this high. It just may lead to a lower high from this high that starts a larger tightening structure, a larger consolidation structure. But again, we're mapping what is potentially coming. Nothing is confirmed, nothing is validated. So we'll see how price comes into this level. Will we get that bounce and then continuation lower, or will we just stream on through? So we're gonna have a pretty interesting couple of days this week. Next is S&P. S&P coming into the bullish fair value gap, already wicked off of it, but like the Dow, I do see more downside. It looks good to come down back towards 39, pretty much 3,900, and then potentially looking to tap under this low pivot here at about 38.83. Once you grab that liquidity, I think you're looking really good for another bounce up. You always try to remember, guys, when you have orders sitting under pivot levels, under swing lows, swing highs, it's a good shot that you're going to have a bit of reversal from the trend that's going, and then have continuation later, because you're grabbing that liquidity and then you're getting continuation from there. All right, so once we take that, again, I would look for another move down to try and attack this consolidation. All right, now as long as we don't take down this low here and we can hold a higher low structure, essentially really this ascending trend line you're seeing here, then we're looking good for continuation on the S&P, very similar to the Dow. Okay, and that continuation will likely actually lead towards a high here, back towards trading back towards here and actually taking it out. The S&P and NASDAQ will have much more pronounced moves because of just their nature and what they hold in their index. So there will be much more upswings as there are much more low swings compared to the Dow, at least. Okay, so watch for the S&P to continue lower, and then once we take out this first little pivot here, I'd say we're due for a bit of a bounce. Nothing major, but a bit of a bounce from there. Next is NASDAQ. So let's take a quick look at NASDAQ. So NASDAQ, of the three, has the biggest extension. I would look for the biggest downside as well. So this fair value gap is where I ultimately see it getting to in the short term. Once we get into this level here, I would look for another pull back up to make another lower high, and then continuation lower. I think it's a very good shot. You're going to see NASDAQ back at 11,000, and then it's going to be very important for it to hold that level and not take out these lows down here. If it does, the NASDAQ has a long way down, because unlike the Dow and the S&P, it has not even come close really to its 2020 high pivot. So this was the pivot it made prior to the 2020 quarantine during COVID. Okay, so this is actually very important for NASDAQ to eventually get to. The Dow already breached this level. The S&P got very close. The NASDAQ has been quite far away because it's extended far more than those two. So if this loses this little short-term bottoming structure down here, you're looking for a pretty aggressive move down, potentially all the way down towards that level of 9,756. So we are getting into a very interesting zone. We are going to want to see a higher low structure starting to form around this general area. Okay, all right, next is oil. So oil, I've been preaching, this chart is very bullish. We are in a consolidation right now. I do have like this cheeky little triangle that I drew some time ago. Again, not confirming it is a triangle, but what I am seeing is a tightening structure overall. Now we do have the potential move to the downside towards about 60 bucks. However, we've retraced far enough from the 120, I should say, to 130 bucks a barrel, that we've definitely taken enough liquidity to the downside. So any point in time, we can actually continue to move higher. And unfortunately, if that war in Ukraine and potentially other places in the world start to go forward, then we may actually see more demand for oil to continue rising. And in my opinion, it's looking very, very good for that to happen, unfortunately. So like I've been warning, watch out for the oil chart. It's a very, very, very bullish chart in my opinion, especially when we look at it from the weekly to the monthly. But if we do get a breakdown, look for 60. It's still very bullish there. Next is gold and silver. So gold having that pullback, that continuation, coming into about the 1800 level. So I'm looking for 1800. I want to see how price interacts there. We have been pretty much just falling ever since we've gotten towards 1960, and there's still a good shot. We have more downside ahead of us. So look for 1800. We may get a slowdown at 1800, or really just around this zone that I have circled. If we do break under here, then the next minor level you want to watch for is 1775, and then under there is 1750, really coming into this fair value gap and this fair value gap down here. Again, gold is so extended up that a pullback all the way back here is fine. It can hold that bullish structure as long as it continues that higher low structure. So if you're not catching the theme, a lot of these assets have broken previous highs, and now the challenge is, if we're going to have continuation of the uptrend, we need to make higher lows. Okay, so that's the general theme you're seeing, and it's the same for many assets, gold included. So let's watch and see what happens here. There's a good shot, if the dollar is going to strengthen a bit more, that we do take out 1800 and then start tapping into the minor level of 1780 to 1775. There's a good shot of that. Okay, next is silver. So silver, nice topping structure, continuation down, and this is coming right to the level I think that's very probable for it to pretty much at least slow down. I don't know if it'll actually hold it immediately, but it is likely to slow down as it comes into this fair value gap and this ascending trend line. Now, this ascending trend line is designed to break. This is not a trend line that's meant to hold long term. It's very, very likely going to break. So what's likely going to happen, especially if gold has that continuation, the dollar continues to get stronger, you're going to see the silver coming to this level, find some bids, you're going to definitely find some interest, and then you're probably going to get a rising structure that has an inherent bearish character that will eventually break this trend line bearish and then continue down. And then we have a bunch of pivots we can look at. I mean, you have the levels here at $18.87 all the way down towards $18.15. Silver is quite a scary chart in the sense that there's a lot of fundamental aspects to it to keep the price low, mainly its industrial use. So upside for it is a bit stunted, especially when compared to gold, and downside for it is going to be a bit, I would say, accelerated because of the demand it has for industrial use. And the more we go towards the green aspects of energy, solar panels, batteries, phones, expansions, etc., silver is going to become more and more valuable via industrial use, which means the price of it has much more incentive to be cheap. So you definitely want to keep your eye on silver. It's going to be very hard for it to move up high and fast, but in the end, until nothing has changed, until this has changed, nothing has changed. It still follows gold. Okay, so it will follow gold to a degree. If gold has another really strong rally, so will silver, but it's very likely going to be stunted just because of that industrial use. But downside, when it follows gold to the downside, as you can see, gold's down 0.66%, silver's down 2.57%. It's going to be much more extended just because of the demand for it. All right, next is Bitcoin. So this is going to be the last thing we look at real quick. So looking at Bitcoin, so Bitcoin's trading generally in the area I expected. So this level right here, 23,955.86 is last month's high. We're going to go on the monthly chart in 1 second here. But so far, Bitcoin's performing as expected. As I've been saying, I am looking for Bitcoin by the end of the month to be trading around where we are. So we have a couple of days left. And if we can close above this level, so above last month's high, it does imply continuation in the uptrend. So the bulls are probably going to make at least one more push towards this level. If they can get that strength to break through, that will be very bullish. Look for a breakthrough continuation that probably will even challenge these highs. But if they can't, and the bears are going to have a lot of incentive of trying to hold this level, then this could be it for the rally for now. We may have a March that's not super bullish. It may be a retracement month. Okay, so this is going to be a very important week and a couple next days for Bitcoin as well. So we're trading in this bullish fair value gap at the moment. We have not tapped into this lower one yet. There's a good shot we may, but what I do like to see is we are potentially showing a slowdown in this selling. Now, this isn't like a major imbalance, this isn't a major move, but we did finally get a daily candle to close above the low of the day before. And we're also having a fairly nice day so far. It's very early, so we have to wait and see how this closes, but if we have the candle close like this, or even more bullish, that's someone engulfing this doji, that does imply at least short-term upside. So we may have a day or two next week of upside for Bitcoin, which will then get us closer towards this monthly level. Now, quickly, let's take a quick look at the monthly time frame here. So this is why it's very important for the bulls to try and get above this level before the end of this month. So when you have a massive move up, especially on the monthly, weekly, daily, really any time frame, when you have an imbalance or a big move up in one candle, if your next candle is a doji, it does imply a slowdown. If that doji closes below the high of the last candle, so in this case right here, it does imply a slowdown is coming. Now, it doesn't mean the rally up is over, but it does likely mean that you will have on the next candle after this doji a pullback. And with a structure like this, if it's going to stay bullish, you're looking at most likely at least a 50% retracement of this candle. Okay, that's the probabilities. That's usually what happens in this sort of structure. So if this closes as a bearish doji, then you're going to see potentially next month in March a 50% retracement of this candle, which means a move back towards 20,000, potentially even slightly lower, going towards 19,000. So if that's what's going to happen, you definitely want to keep that in mind if you're long. We've been long since 18,375 in the swing trade service for the Lemon Garden. So I've been very clear. If we do close under this monthly level, I'm going to close out the long, and I'm going to watch price action all of March. And if I see an opportunity to get in at a better price, we'll just reload on the long there. Okay, so we'll bank in on the profits we've made, and then we'll look to get in lower and try it again. All right, because the probabilities of us having continuation to the upside are still quite high as long as we close March above this level, so above the high of the December monthly candle, which that high is 18,376. So it's very important that if March does play out, we can trade below it. Right, so let's say we have a really big retracement down, 80% retracement. As long as we close the monthly candle of March above that level, it does still imply at the very least a consolidation. Okay, a consolidation is forming between this structure here. So you'll have probably a lot of trading between 22,000 to 20,000, or at least a continuation of the uptrend that may take some time. Okay, so I am looking forward to this monthly candle close, and I'm definitely looking forward to March. March looks like it can be a very wild month, but we just have to keep calm, follow the charts, always follow the charts. The news and everything else comes secondary. If the charts are telling you something, you want to trust the charts. Okay, guys, that is it for the overview. If you have any questions, make sure to leave a comment on the video. I love to read the comments, and I try to answer all of them that I come across. And if you haven't joined the Discord, join the Discord. It's a free Discord as of now. And whether you're a premium member or a free member, I try to give you content one way or the other and opportunities to succeed and pretty much get better at trading and share your thoughts. I'd love to hear your thoughts as well. All right, everyone, remember, be patient, be vigilant, and be nimble. I love you guys. Take care. Bye.